traders at Axis Bank observe a bullish bias on the long-tenured on-the-run bonds, with some interest in short-tenured papers as investors continue cherry-picking higher-yielding instruments. Dimeji Obasa, fixed-income dealer at Axis Bank, now joins me now for more market updates. Thank you so much for joining us on the show today, Dimeji.
Thank you for having me.
Let's start off really now with an overview of what played out this week. The week started really with quite fixed eyes on what the CBN governor was going to announce. Now we've seen the NPR rate hike of about 50 basis points and then a couple of market reactions. How are investors positioning at this point in time? What has played out so far?
So what has played out so far has been bullish sentiment in the fixed income markets. Like you noted, we did see a lot of post-auction bullish rallies, particularly on the longer end of the curve. We saw the 2037s and 49s that closed at 15.2% and 15.75% trade about 45 basis points lower. Yes, you're right, the CBN increased the NPR, but that has not necessarily changed market sentiment as it relates to fixed income instruments. And we expect that this bullish run will continue even into next week. As we expect more liquidity coming into the system, we should see FAC inflows coming into the system totaling about 410 billion next week. That would further increase the bullish sentiments that we have in the market.
And talking about liquidity now, we've also seen that liquidity squeeze within the money market rate has sustained the high rates that we've seen so far. Tell us a little bit more about that and also how we see things panning out a little more in depth in terms of next week's expectations. We had the bond auction this week as well.
Yes, so over the last 2 weeks, there's been low levels of liquidity in the money market, which increased the overnight rates. Also, the floor for the money market rates was increased as a result of the NPR increasing, so also causing a squeeze within the money market. However, going into next week, we expect liquidity to come into the system that would then sort of ease up the market. We expect that situation to make the liquidity in the money market better going into next week.
And also the cautious trading as well, we are seeing, do you think that would also still linger a little longer? Oh,
yes. The general market sentiments for the mid to long term, that's if you look at the 6 months to 9 months range, is for increase in rates overall, right? The government has indicated, their willingness to borrow more, and market participants would try to, align their portfolios to reflect that. However, in the short term, we have significant liquidity coming into the system, which would move rates downwards significantly. In addition to the FAC inflows, we also have a bond maturity coming in next month. And then, market participants are basically positioning themselves for all that liquidity coming into the system in the short term. And that's why we've seen the bullish run post-auction. But it's still worthy to note that in the mid to long term, the expectation is for higher yields.
Okay, now and then wrapping up really now, do you still see the 2037 and then 2049 still remain the most sought after papers?
Yes, we do, because they're the highest yielding FGN bond instruments at the moment. The 2037 is trading around 14.8%, while the 2049 is trading around 15.3%. It's also worthy to note that the 2037 in particular has one of the highest coupon payments, which make them really sought after by asset managers. Yeah. So we would expect that these securities will be the most sought after going into next week and even into April.